You're with us here on Business Today. I'm Abha Bakaya. Here are the day's top stories. Sensex and Nifty fall for a second straight session on global economic gloom. Banks and auto stocks decline. Mid-caps outperform. The rupee weakens against the dollar but still below the 80 mark. Adani Group to build 3 Gigafactories as part of a $70 billion green investment. The group will build solar, electrolyzer, wind turbine plants in India. Global stock markets remain sluggish as the European Central Bank may hike policy rates by 75 basis points tomorrow. Crude oil prices decline to a 7-month low. Unending misery for Bengaluru as torrential rains continue to lash the city. With Bengaluru's tech hub submerged, will the inundated city lose its tech hub crown to Delhi NCR? We get you a detailed analysis on the show. The government set to announce new guidelines for social media influencers who endorse brands and products. The guidelines are expected in the next 10 days. Consumer Protection Authority says influencers must provide disclaimers and be treated as an endorser. Any violation will result in penalties starting from 10 lakh rupees. The Adani Group is stepping up investments across the green energy value chain as it aims to become the world's top renewable energy producer. And today, Asia's richest man, Gautam Adani, said that his ports-to-power conglomerate will build 3 gigafactories for manufacturing solar modules, wind turbine and hydrogen electrolyzers as part of a $70 billion investment in clean energy by 2030.
The Adani Group has already committed $70 billion to these efforts. This will see us building 3 gigafactories in India, leading to one of the world's most integrated green energy value chains. This will extend from polysilicon to solar modules, complete manufacturing of wind turbines, and the manufacturing of hydrogen electrolyzers. As a result, we will generate an additional 45 gigawatt of renewable energy to add to our existing 20 gigawatt capacity, as well as 3 million tons of hydrogen, all of which will be completed before 2030.
Suzlon shares seem to be reversing the downturn of the past. The stock hit a 20% upper circuit earlier this week on speculation that Adani has bought some shares in the company. Suzlon surged over 70% in the last 1 year, in fact. My colleague Sakshi Batra gets us some of the key reasons behind this surge and what investors can expect from the stock going forward.
Well, that's right. The shares of the renewable energy company Suzlon Energy have soared on Monday, hit a 20% upper circuit. It again rose by 4% in the intraday trade today before profit booking really took over, and the stock ended almost 2% down in trade today. But the sharp recent surge that has been seen has come on the back of the news that the company has won an order from Sembcorp Green Infra Wind Energy to build 180 megawatt wind farm. Now, under this, Suzlon will install 86 wind turbine generators or WTGs with a hybrid lattice tubular HLT tower and rated capacity of 2.1 megawatts each. Now, the company has also mentioned that this is the third repeat order from Sembcorp that it has got. And not just that, there's a huge buzz on the street and speculation to some extent that Adani Group may have some interest in the company, as Adani Group has already been stepping up investments across its green energy value chain, as it also aims to become the world's top renewable energy producer by 2030. Remember, Gautam Adani today, in fact, has said that its ports-to-power conglomerate will build a 3 gigafactories, in fact, for manufacturing of solar modules, wind turbines, hydrogen electrolyzers as part of the $70 billion investment to clean energy that he has committed by 2030. Now, the buzz has actually led to Suzlon's market cap also rising above 10,300 crore rupees on Bombay Stock Exchange. And it is not just a matter of 1 or 2 days of a momentum that we've seen. The stock has in fact surged about 37% in the last 1 month, following the solid Q1 numbers where Suzlon posted multi-fold rise in its net profit as well. Not just that, the Suzlon shares have also rallied about 70% in the past 1 year. Now, I caught up with Avinash Gorakshaka, Director Research at Profit Mart Securities, to really understand and find out the key reasons behind this continued uptrend in Suzlon shares and whether one should look at investing in the stock right now. Listen in.
I think the clear focus on Suzlon has come in largely because last week, all of us must be aware that Adani Green has acquired 54 crore shares of Suzlon Energy. Now, this was a very pleasant surprise because, the buyer has been Mr. Gautam Adani as the promoter of Adani Green. And this gives a lot of expectations and speculation as to what is the intention of Mr. Adani for Suzlon. Now, to just give you a background, Suzlon still has a negative net worth. It's got a carry forward loss of 5,000 crores. The first quarter of FY22, has included an other income of 24 crores. Otherwise, the company is still struggling with their cash flows. But the good part is Suzlon has got a lot of orders. In fact, recently, just a couple of days back, they've got an order from Sembcorp for 180 megawatt windmills, which has been announced on the exchange's website. So I think a lot of work is still required to be, executed by Suzlon. And I think, obviously, it requires a lot of capital. So I think probably the market is guessing that there could be some sort of synergy between Adani Green and Suzlon Energy. Obviously, we don't know the real intention. But the market is very gung-ho on the fact that Adani Green has acquired, these shares, and that could obviously lead to a lot of speculation. As of now, it's very difficult to comment. But this rise in the stock price is purely on the fact that Mr. Gautam Adani has also made it clear that he's very much interested in manufacturing wind turbines, which Suzlon actually makes at its existing setup.
Another choppy day of trade on the Lal Street, though benchmark indices came off lows in the later half of the session. Both Sensex and Nifty ended in the red as tepid global cues drew investors away from riskier assets. Sensex barely managed to stay above the 59,000 level, closing in fact 168 points. Nifty also ending lower but managing to just hold on to 17,600. It was the auto and financial shares which dragged markets lower. Tata Motors, Bajaj Auto, IndusInd Bank, M&M, Maruti Suzuki, some of the top Nifty losers. On the flip side, Shree Cement, Ultratech Cement, Adani Ports, Coal India and Grasim were the top blue chip gainers today. Bengaluru has taken centre stage as parts of the IT hub continue to remain submerged following torrential rains in the city. This has prompted a social media debate on whether Bengaluru deserves its India's Silicon Valley title or should Delhi NCR become the new tech hub. Take a look.
Torrential rains have lashed the city of Bengaluru, leaving India's IT capital inundated. While there is some respite from the rains, the misery of Silicon City residents continue. Waterlogging, pothole-ridden streets, open manholes and traffic snarls have become the new reality. Doesn't the situation sound very similar to the one the maximum city finds itself in quite often? Seems like Bengaluru has gone the Mumbai way. In fact, urban flooding is becoming increasingly common in many parts of the country. But why do Indian cities flood year after year? Unchecked urbanization, unplanned real estate development, poor city planning and encroachment of stormwater drains has left cities to the vagaries of extreme climate. Political neglect and lack of accountability has left citizens grappling with the aftermath of these flash floods. With techies left with no choice but tractors and JCBs to reach offices, many believe that Bengaluru should give up its crown of being the IT capital. A debate has commenced on social media with some users rooting for tech giants to shift base to Delhi NCR. With the Silicon Valley flooded, companies are facing major losses due to the failing infrastructure system. A LinkedIn user compared Gurugram to Bengaluru on manageable traffic, better metro connectivity, better and cheaper living options. But the internet is divided over this argument. Users have rebutted these claims, pointing out that even Gurugram floods in torrential rains. They argued that the bad infrastructure situation is the same for many metros. While the debate may be on about which is a better hub for tech giants, there is no denying the fact that rapid and unplanned urbanization has left every metro vulnerable. It is high time politicians stop blaming climate change for urban flooding and take concrete steps to curb the menace of torrential rains. Bureau Report, Business Today Television.
Joining us now, Vikas Wadhwan, Group CFO, Housing.com, PropTiger.com and Makaan.com. Sharat Chandra, VP, Earth ID and co-founder, India Blockchain Forum. And Dilip Modi, founder of fintech startup Spice Money. Gentlemen, thanks so much for joining us, and it's good to see we've got a very varied panel here in terms of perspective. Let me start off with you, Sharat. Is Delhi NCR taking over Bengaluru as the tech startup hub of India?
So I think if we go by numbers, then Delhi, in terms of new startups, have already dethroned Bengaluru. So according to recent economic survey report, Delhi had close to 5,000 startups, where Bangalore had 4,500. But if you look at the deal flow or the fund flow, that's where Bangalore takes a lead, and Bangalore has the average ticket size is close to 41.6 million, but Delhi has close to 29.6, a little bit above the national average ticket size. And this number went up to, for Bangalore, up to $61.6 million. So when it comes to deal funding, the funds are flowing back to, again, Bangalore-based startups. But again, the city is facing its own set of challenges in terms of infrastructure, and we are all witnessing what's going on in Whitefield and other areas. So this will also present new opportunities for other areas to emerge as challenges to Bangalore. Let's say Hyderabad for that example.
Vikas, let me come to you on, really
Hello.
what you feel are the reasons why until now we've seen Bengaluru as the natural or preferred destination for startups.
Yeah, see, I think one of the co-panelists have already shared a lot of data. But I think if you look at the infrastructure, the overall ecosystem, not exactly the infrastructure, I won't pay much attention to the current floods in Bengaluru, because I think all the big cities, whether Gurugram, Mumbai, Bengaluru, or other cities, have had their fair share of similar challenges in the past. But if you look at the overall ecosystem, definitely Bengaluru scores more because there are many more large startups. The tech talent availability is comparatively better in Bengaluru as compared to the other cities, while Gurugram is catching up very, very fast as compared to Bengaluru. But still, because there are a lot of large tech companies and tech startups already present in Bengaluru, it provides a very good ecosystem for the new startups to prefer Bengaluru as compared to Gurugram. And also, if you look at the cosmopolitan ecosystem in Bengaluru, because there is a very large percentage of migratory population, people feel very comfortable migrating to Bengaluru and find either a job in the tech ecosystem or set up their own startup in that city. So that's the reason people prefer Bengaluru more than other cities for starting a tech startup.
How much attention, Vikas, should one really be paying to the floods? I know you said, look, let's not think about it too much, let's put this aside. But I actually want to bring up the fact that while perhaps what we're seeing in Bengaluru is unprecedented, we have seen some severe flooding in parts of Gurgaon as well, as recently as, over the last couple of years. So is that a good enough reason to blame for a shift? Or is what we're seeing this time really unprecedented and causing, of course, some of these conversations to come up?
Yeah. See, as I already mentioned, I won't pay much attention to this one-off incidents in Bengaluru because all the big cities have had their fair share of similar incidences. I think, do we need to upgrade infrastructure in most of our big cities? I think yes. But if you purely talk about infrastructure, I think Gurugram will score better than Bengaluru. I'm talking about physical infrastructure. That's definitely is better than Bengaluru, because Gurugram, if you talk about, it's comparatively a new city which has come up in the last 20 years, and Bengaluru, the center of Bengaluru is pretty old, and it is becoming difficult for the government to suddenly catch up with the requirement of the infrastructure development as far as the center of the Bengaluru is concerned. So that's one big challenge. But I mean, when you actually make a choice, where should you set up your company or set up your startup? I think infrastructure is just one aspect of it. And if one has to pay a lot of attention to infrastructure, then probably Noida may score better than Gurugram and Bengaluru. But there are some other challenges in Noida, right? Because the tech talent compared to Gurugram and Bengaluru is not as high in Noida as compared to Gurugram and Bengaluru. So there are multiple aspects which needs to be kept in mind, and infrastructure is one aspect. Second is the tech talent availability. And third, as I mentioned, the overall ecosystem. When you're starting a startup, you rely a lot on the ecosystem. You go and work with a lot of other co-founders. You go and do a lot of exchange in terms of sharing ideas and so on and so forth. So if, let's say, you're at a place where you do not find that ecosystem, you find it challenging. So multiple aspects needs to be considered, and infrastructure is just one of them.
All right, gentlemen, thanks so much for joining us for this conversation today, and good to get a sense of, how committed the community continues to be despite currently being submerged following those torrential rains. We're going to take a very quick break at this point of time. Back in just a moment.
Make your media plan smarter with India Today Live TV on your connected devices. Everyone's busy finding what's trending. You're busy finding out why. India Today, for those who research before reacting. Download the India Today app now.
Welcome back. Just a week after the cap on airfares were lifted by the government, ticket prices have crashed in several routes. With aviation fuel prices on the decline and corporate travel on the upswing, airlines have made air travel more attractive by reducing air ticket prices.
Akasa Air, the new kid on the block, also the one to set the cat among the pigeons by reducing airfares early this month. Through the sectors it flies on are still limited. The fare reduction was soon matched by other established players like market leader Indigo and Go First. The immediate result, tickets on the Mumbai-Bengaluru route have fallen to around 2,000 rupees if booked about 3 days in advance. A trip to Ahmedabad from Mumbai is just 1,400 rupees if booked about a week ahead. A Kochi to Bengaluru ticket starts at just 1,500 rupees. One of the most touristy routes, Delhi to Kochi, has fallen to just 8,200 from nearly 15,000 rupees a month ago. Flying from Mumbai to Jaipur will set you back around 3,900 rupees. The price caps and floor prices were put in place by the government in May 2020 in wake of the first COVID lockdown. This was to protect airlines from predatory prices. But now, with the lockdown impact abating, the restrictions have lifted. So why are airfares falling instead of rising? The first reason is increasing competition. Then there is the return of the corporate traveller, which marks good tidings for airlines. Nearly all flights on popular routes are flying full, giving airlines headroom to reduce airfares. The pickup in the post-COVID economy has helped airlines increase their cargo revenues as well. The The festive season is meanwhile gathering pace, marking the end of the usually slow July to September period. Demand for airfare is expected to zoom, and some feel that this may lead to a rise in airfares again, but not as much as they were before the removal of price caps last month. Bureau Report, Business Today Television.
I'm joined by Ameya Joshi, aviation expert on this trend. Ameya, why have airfares fallen this month?
Hey, thanks for having me here. Indeed, airfares have fallen considerably right now. This is the first time since May 2020 that airlines can price the way they want, right, till the next day or the day after or whatever, because first the caps were there for a specific period, after which it shifted to a rolling 15-day period. And starting 31st August, it's all off. You could actually price it at whatever. The good part here is that not all flights are selling at the lower rates. This is very sector specific, sectors which have seen either competition joining in or additional capacity being deployed. So if you see certain sectors like Mumbai, Ahmedabad, Bangalore, Kochi, we've seen the new entrant join in and the incumbents also adding capacity. So what happens when capacity goes up is that you cannot absorb all of this as a market immediately. You need to stimulate the market. You need to get more people to move from other modes and take air as a mode of transport. And that's exactly where you need to drop fares and attract those passengers. Unfortunately, if you look at the fares right now, they've gone so low that on few of the sectors, they're actually cheaper than the bus fare, than a luxury AC bus fare. And that's definitely going to hurt the airline. So it's not that it's not going to hurt. Hopefully, this is a short-term phenomenon. The market can absorb all the capacity which is being deployed, and then the fares reach to a certain level again, which are sustainable for the airlines and at the same time attractive enough for the passengers to come in.
And what kind of trend do you see during festive and the winter travel season that's coming up?
Now, traditionally, the July, August, September quarter is a weak quarter, and there are multiple reasons. Monsoon leading to not many people traveling, the next academic year starting, exam season, so on and so forth. But as we get into the holiday season, right, started with the long holiday during the Independence Day weekend. We have a couple of long holidays across the country coming up, festival season coming up, leading up to Dussehra, Diwali, right up to Christmas, with different festivals coming in, travel picking up again. Definitely we should expect more passengers flying. More passengers flying automatically translates into higher airfares than what they are right now. So from a passenger perspective, if you're looking to buy and you can see good deals, do go ahead and purchase, because fares are likely to firm up as we go closer to Diwali. That's going to be a peak travel season, and it's all under assumption that there are no new waves of the pandemic, and we are not going to expect anything unexpected on the pandemic side.
All right, Ameya, thanks so much for joining us on that. India and US together are likely to contribute 30% to global GDP in the next 20 years, according to the Finance Minister, Nirmala Sitharaman. She was speaking at the US IBC's India-US Summit, and she also talked about an open network for digital commerce and how it will digitize small businesses without any additional charges.
What I see as the global possibility is if India and US together were to work, within the next 20 years, I guess we will reach a 30% of the global economy size, and we shall be contributing to the global GDP to the extent of about 30%. And that itself will make India and US the engine of global growth. On the digitization itself, between the US and India, I see a lot more further scope. And this I'm saying on a day when the ONDC, the Open Network for Digital Commerce, is being given a big push in India. It will democratize the digitization. Common people, common small sellers can all now, without being excessively charged, get onto a platform, and through that have several other platforms equally talk to each other. So I choose X payment portal, whereas I'm looking for a commodity which is available on a different payment portal or a marketing portal. this and that portal can talk to each other, having come on board ONDC. That is, I think, a massive revolution where many of the SMEs in India cannot afford digitization through the otherwise charging portals. This government of India, owned in the sense government of India and many of the government of India institutions owned ONDC, is revolutionizing the Indian retail manufacturing and also retail consumers.
That's all we have time for on the show tonight. Thanks so much for watching.